All right, so it's the weekend. We're gonna do the normal routine. We're gonna look at some of the positions in the portfolio. Look at the overall portfolio performance, what my plans are. We'll look at the markets in general, and then we'll look at some stocks in the technology sector, some AI stocks. We'll look at some energy names, and then we'll end on crypto and maybe some gold and silver. But for the most part, this week was pretty good in terms of the portfolio. I'm at 85.83%. I think it was maybe about 4 weeks ago that I was at 92%. So I'm not too far off from my highs. This was a pretty bad week in terms of number of trades that didn't work out. But for the most part, I kept my losers small. That's kind of one of the main goals of my strategy is to keep the losers small. I do have a max loss of 2%, which is $7,200, but I usually do not let it get to that point. If the thesis isn't working, there's no point in sitting in the position and hoping that things turn around. So I'll usually exit. I can always re-enter if I'm wrong, if it starts to play out the way I think it did or was going to. But for the most part, I cut these losers off fairly quickly. I don't like sitting in losing positions and hoping that things turn around. So I had a couple of software trades that I thought were in the process of turning around. They didn't work out, so I quickly closed them. I had some crypto that I thought was going to play out a certain way. We'll go into that. It didn't play out, and I'm actually turning pretty bearish now on crypto. I'm turning bearish on the markets in general as well. I decided to close some of the gold and silver, although those look like they still may have some bullishness in them, but I still closed them. I closed out of AG, silver. I closed out of a position we'll talk about in SPCX that I just had bad entry. I took a position that I shouldn't have taken, and I'll show you in the charts what I'm talking about. And then my focus this week was on energy names, and I added some energy names to the portfolio, and they seem to be working out pretty well. And they worked out pretty well in the order in which I thought that they would. EOG coming into this week looked like the best chart, and it's performing the best of the plays that I've put on. Excuse me, but let's go to these software plays that didn't work out. Let's see here. So this is Workday. So the stock has just been pummeled, and at some point, I am expecting a turnaround, and the question is if we were going to see that this week, and it played out to where we're not going to see it, and I don't think we're going to see it anytime soon, to be honest. So Workday had been trading within this range. My strategy is basically to trade off of levels and trade off of ranges. So for the most part, this level up here has been respected, and that price is either rejected at that price, or eventually I think price will use that as support. Now it's resistance, but it'll use that support to sustain future higher prices. And so I want to trade off of these levels, and that's what I was anticipating by getting in pretty early. I probably got in too early here, thinking that we were going to move higher and that the third time was going to be the charm that we would break through. But it didn't work out that way. I got in expecting to see further strength, and we saw weakness. And so my stop was down here at 133.47. But once we took back this this candle right here, I started to, and I got an alert once we crossed this line at 137.82. Came back, looked at the chart, said, why am I sitting any longer in this trade? Might as well just close. I don't need to see my stop get hit. it got hit. It came back down into this trading range down here, and it quickly exit. And for the most part, it looks like it may just want to consolidate, may want to still form a base before another attempt to move higher. So it just didn't work out. My thesis didn't play out, so I got out. And it didn't hurt my portfolio too much because what is it? Well, $1,600. So my max loss is $7,200. $1,600 is close to 0.5% loss in the portfolio. I probably should have gotten out a little bit earlier. Once this candle got taken back, I probably should have gotten out up here. But it is what it is. It's no big deal. Adobe was the next one. So let's look at that. I don't have my levels on here, but or my entries, but it was on this candle that I got in. So my expectation was for this chart to continue moving higher, just like Workday. Let's see here. And it just simply rolled over. So I got in somewhere on this candle up here. This was my hard stop, and I got out. I believe it was on this candle right here. It broke out of this up trend, and there was no follow through. There was no strength. So I don't see strength in these charts now. I see continuous downside, particularly in Adobe. Now reported this past week, and they reported good earnings, but they got hit as well. I think this AI causing this SaaS apocalypse is a pretty strong thesis that people are still sticking to, because you can see that they had a double beat, but the stock was down on the day 6%, and it continued down. Now it's bouncing a little bit, but it's still in a downtrend. So I don't think that there's going to be any recovery in these software stocks anytime soon. ETH, Bitcoin. Let's see here. I'm turning bearish on crypto. We'll talk about those later. Let's see. I got out of the silver miners and the SIL play. Again, we'll talk about those later. SpaceX is an interesting play because it doesn't follow my typical strategy of trading off of levels to the upside. It's to the downside now. So let me kind of get on a soapbox here and talk about SpaceX, and that when stocks IPO, there's a lot of opium that people want to jump in and think that this stock is going to the moon, literally, and they push price up. But in general, when you're trading an IPO, you want to see a 50% drawback in the IPO day price, and that's when you start to look to see whether it's a good buy or not. And I don't think we're there yet at 50%. Let me see here. Yeah, I don't think we're there yet. It was at 150. What did it close at? 172. Yeah, we're not there yet. I think I actually have. Yeah, I drew it here. So it's at $80. But the other thing that's going to put downward pressure on this stock is the lockups. They're going to release 20% more shares on, I think it's August 11th. And so that's going to push price down even more, because these are investors that got in before the IPO, and they certainly bought their investment is per share is definitely a lot lower than what it IPO'd at, and they would be crazy not to take profits. You even see some of the stories of people who invested in SpaceX coming out saying that once their shares are available to sell, they're going to sell. And it reminds me a lot of the ICO days, the initial coin offerings in crypto, when the key to making money in those ICOs was to buy the coins or tokens ahead of them getting on the exchanges. And I believe one of the coins that a lot of these would 10x, some of them would 100x once they hit the exchange, and then you would be able to sell at a very good profit. And I bought XRP at 7 cents, and when it hit the exchange, I believe it was around 25 cents. So that was a pretty good return. And if you didn't sell when they hit the exchanges, a lot of them came back down to the price that you bought them at. So I think people who are going to get unlocked in SpaceX are certainly going to be contribute to the selling pressure in the stock. So I think this stock is going much further down. So I initially bought up here at 133, and I bought January $100 strike puts. And what I was looking at originally was that this downtrend line, price couldn't get up to this downtrend line, and it couldn't get over this level back up to this trading area where it had traded previously. And it was just really coming down, consolidating, putting in a bullish consolidation pattern, and then breaking, coming down, consolidating, putting in a bearish pattern, breaking. And it's just continuously doing that. Some people call that one time framing down. And when I saw that it couldn't get above the previous high here and above this level is when I decided to short. And it worked. It worked in my favor. And when it broke this level, I started looking for an opportunity to add to my short. And so we saw this big up day. I was expecting this downtrend to hold like it has in the past. Sure enough, it was not only holding, but it was getting ready to force price down. I added to my puts. I bought the December $100 puts, and it gave me some good. This initial position gave me the opportunity to add here, and that's kind of my strategy of what I do. In particular, I do it to the upside, right? So I'll buy a stock that's going up. If it reaches a certain level and the setup is there, I'll take the initial position, and then I'll wait till price gets, till I get a good amount of profit in the bank. And then I'll add if I do see further, in this case, downside or upside in a stock that's going up. And then I when it quickly broke this level, I started looking for an opportunity to add to this position again. And it wasn't a good location. You could see that previously I was expecting price to get above a certain level, or I was watching a certain level, and it failed. Same thing here. It failed. But this is not a failure. This is down to another trend line. And it just wasn't a good location. I just wasn't thinking right, I guess, when I bought this, and I bought the October $100 puts. And then when it did this, when it really started to respect this level, is when I got concerned that we may have seen a short-term bottom here. And it quickly went against me, went above this level. When it came back down to the level, I saw it as an opportunity, not that price was going to further go to the downside, but an opportunity to get out of my position to kind of correct my error. And so I got out on this candle, and a small profit. I think I made $150 off of it. So it was just a bad decision to get here. Now it looks as if this price level is kind of trying to consolidate. It may be just doing what it's done before and just trading around a certain level and then breaking down further. It'll be interesting to see if it can make it up to this trend line. Now, if it gets back above this trend line, I may cut this position because I don't want to lose. Right now I'm in the profit. I don't want to lose. Yeah, I'm up $5,000 or no, I'm up, yeah, $5,000 on the position. So I don't want to lose too much of that. So if it gets back up here, I may just cut this. And then if it shows any strength, like it's wanting to move higher, I may just exit the position altogether. Yeah. So right now I'm in, 8 grand. So, I want to try and protect those profits as much as I can. I may just hedge the position. We'll see. I may just buy shares just to see if I can offset, because I do think that this is going to continue to go down well into the August unlock. And I think once those shares are unlocked, and I believe it's a day after, or maybe a couple of days after they report. So they're reporting on the 6th, and I think it's the 11th or 12th, or maybe, the 11th or 12th that the shares unlock. And that's going to, in my opinion, that's going to push price down lower. So I would like to try and stick around till then, but we'll see. I don't think I'm going to add again unless I see something like another setup like this. If we move up here and we reject and we come back below that line and we start to see some strength to the downside, I could add this back again, but I need to see the right setup like I saw here and here. Let's see. EOG was a good winner this past week. So yeah, I bought on the anticipation that we were going to break this downtrend line. And so I bought here. I bought on this candle pretty much close to the low. I believe we opened up down on that day, and I saw it as an opportunity to add or to initiate a position. And then we ended the day higher. And so I'm in the profits pretty good right now. I'm in. Yeah, I'm up 5%. I'm up there almost 1,400 on the position. So I may be looking to add to this. I do think that oil is going to go much higher. If we get above here on some strength, we see like another candle like this, I may add double the position up here. Or better yet, if we came down to this trend line and we bounce, I will probably add there. Now if we come back down and we don't bounce, I'm gonna close this position. But with this oil, it's such a sentiment driven and such social media driven that this can go quickly against me. So if I said I would double, but I think I'm just going to add half of a position up here. So 3.5. I'm in it right now, 7%. So I'll add 3.5 to it if we get up to that, up above here on strength. CVE. So I bought here anticipating that we would get up to this trend line and break it, and that's what happened. And now we're up into this trading area, and I expect it to kind of consolidate up here or move higher. If it comes back down to this line and it doesn't bounce, or it closes just below it, I will probably take this off of the table. I'll probably close the position. Now, I would like to see it move much higher, and I think there's the opportunity for it to move much higher because we're just now breaking out of this trading range. And the ideal position was to take it on the break here, but I took it on the break of this trend line here, anticipating a move higher. You could see it kind of came back down to this previous trading zone and then just moved higher. It looks like it wants to challenge the all-time highs. But what I'm expecting it to do is, you can see it before, it traded within a trading range it eventually came back down, but it came back into this trading range and then broke up above and traded again for several months in another trading range, broke down again, came back in, bounced off of this bottom level, and now is moving higher. And so we may see another trading range here. Now, like I said, if it breaks down this level right here, I'll get out. But what I would like to see is it to maybe even consolidate up in the upper trading range and then move higher and hit one of these targets. But I'll keep a close eye on it because it could just have an expanded range right here where it's trading. You can see that once it moves out of these ranges, there's not a whole lot of I mean, it's a quick move up and then consolidate. So we may be getting that again. I don't want to sit in it if that's what's going to happen. I'm expecting oil to move much, much higher. So my hope is that we just break out of this area and then move to one of these targets. Let me look at oil. So you can see oil, it came back down, filled this gap down here. It didn't want to, it rejected these lows down here and it moved higher. And then it broke this downtrend line, which you see in a lot of these oil and gas stocks. They all have this similar downtrend line that they were in, or are about to break or have broken and have extended out quite a bit. And you can see that price came back down to the trend line and then bounced. So this thing wants to move higher. And so I'm anticipating a move above 95. And then probably 100 is probably a key strike there. And then I don't know, maybe we'll look to see if these can break further, but I'm anticipating a move something like this soon. I don't think there's any end to this Iranian conflict, and I think we go into next year easily with the war going on. And I think a main driver of this is China. If China stops buying, oil will come back down because there's just a surplus of it. But if they go back to buying, which there are indications that they are buying right now, oil will return back to these highs. There's a guy that I follow that he showed some data recently that China is stimulating growth. And so that's going to be bullish for gold, some of the metals, and it's definitely going to be bullish for oil. But if China decides that they're going to slow down and not stimulate the economy, then you're going to see oil fall much lower than this. So I'm just going to keep an eye on that data. Sue, where's Sue at? Suncor. So Suncor, I bought right here. I bought on this candle, and it's moved up now. It came back down. It tested a minor level there, but moved back above this major level. And you could see that it was respected. That level respected. It rejected it several times. Once it fell through and recovered that level, it tested again, but didn't want to spend time down there. And now it's moving higher. So I would expect it to move to the top of this range. I don't expect a breakout per se, but I would expect it to move up to the top of the range. I don't see a place to add unless we get strength on a move above the all-time highs. Then I would add. But this is not a particularly pattern I would expect a large move out of. I would expect it to maybe consolidate at some point up here. SM. So, I mean, like I said, you saw the similar pattern in oil, and this one's breaking out. I took it on the move above this level right here. it went against me. It came back down. It closed below this level. Excuse me. And if I saw follow through on this candle, I was going to get out. Fortunate for me, it just opened up the next day, gapped up to this above this level, and then it moved higher. And now it's trying to stay within this top range up here. So if it fills the gap, I may get out. That will probably be my sign to get out. For now, it looks pretty good. I'll expect for it to continue like it did here and look for a move higher. XOM. So XOM I did chase. And I chased because I wanted to be in one of these majors, and I kind of missed the boat on Chevron and COP, and so I kind of chased here. We saw the break of the trend line. We have these levels down here. I bought. Let's see. I bought up here, and I actually initiated a position in another portfolio on the break of the line, but I didn't initiate a position in the Substack portfolio until here. And it looks like it's hanging. It looks like it's trying to hold price at these highs. The next level would be 163 and then 169. And I'm in a full position now, so I don't think I would add to the Substack one. I did add to another portfolio up here. So I'm in, I have a pretty good average, but if it breaks below this level and shows some strength to the downside, I'm going to close the position. And that holds true for the Substack position as well. So that's pretty much, also Repsol. I got in Repsol. Let's see here. Yeah, so I got into Repsol. I'm expecting Repsol to be one of the bigger winners, because you can see that much like one of those previous oil plays, it goes into this range, it breaks out, and now you're seeing a breakout of a much bigger range. And it never came back down to test the bottom of that range, and now it's moving higher. And so I'm expecting it to consolidate up here and then move higher. Sorry, let me yeah. So I'm expecting it to move higher. So I'll just sit in this. If it breaks down and comes back into range, I'll get out. So I think that's it of the portfolio for this past week. There are a few energy plays that I may add, and I may start adding shorts to the portfolio this week. Let's look at sector rotation. So this red one is energy, and the blue down here is technology. And you can see, for the most part, that's pretty much the two extremes. I want to keep an eye out on, where is it at? Consumer staples. Yeah, so I want to keep an eye out on consumer staples, which is this one, this teal one right here, to see if it starts to turn up. It appears that liquidity is leaving the markets now, and it's going into the economy, but for the financial markets, we may start to see a downturn. And I think that's one of the reasons why Bitcoin's been struggling for a while now. And I do think inflation is going to move much higher. So I think that's why XLE is starting to really separate itself from technology. And technology, I think, is just starting to move down. I think there's a lot more room for it to move down. So let's look at the S&P. So Um, I'm not seeing any follow through this past week. None of these candles show. I mean, look, we got a down day, up day, down day. There was a follow through here where we gapped down, but it looked like we were going to take it back on Friday, and then we just kind of closed slightly up. So there's really no follow through here, and most of these trading days are closing within the initial trading range. You can see it opened up here, and we closed right in that trading range. Monday we did have a bit of a trending down day, which you would expect more downside because it's closed at the lows, and instead we gapped up. It hasn't been a very consistent type of week for us to expect either a move up or move down. But this kind of feels like it's distribution pattern rather than an accumulation pattern. And it looks like it wants to break to the downside. The NASDAQ is even worse. It's already breaking support down here. And we could come back to the downside trading range. I have all these targets that I've been kind of putting off for a while, but I think it's time to start expecting some of these downside targets to get hit. Let me open up to an hour. Yeah, I mean, I have targets all the way down to 69.22. And I think that these are now in play. So I'm expecting us to grind down lower. Even though we didn't show much follow through this past week, it just feels like there's too much money leaving the financial markets right now. I think liquidity is coming down in the financial markets. You see that all this money is going out into the economy now. Google has increased their capex from 190 billion to 210. All these other hyperscalers are going to be doing the same thing. So money has to be somewhere. It's either in the economy or it's in the financial markets, right? And I think the time to have invested and to get returns on stocks is past. I think that we're not going to see these 25% returns anymore, probably for the next year or so. Because I do think that liquidity is coming out of these stocks and going into, AI or whatever it is. Maybe it's going into some of the costs for higher inflation. These companies are not worth, the stocks are not worth their cash balance anymore because they're depleting their cash balance. So you can't add that to the value of these stocks anymore. We're now in a transition where money is leaving the stock market and going into the economy. And unless you see some kind of return on that money in AI, Google's not valued at what it is today. Let me pull up the chart of Google. Yeah, I mean, Google's not worth $310 right now if they're going to deploy 210 billion into AI for next year. That's the whole nature of the market. I mean, if it had its cash balance, then you could say, yeah, look, I mean, cash on hand is this amount. They plan to not, to reduce CapEx or whatever. And that stock will have, you'll be able to add those to the value. But now that money's leaving these companies, they're not worth the money anymore. That's why I'm like, SpaceX, they don't make money. They lose money. So why would you evaluate it at 1.5 billion? I think Kathy Lee said it's going to be a 30 billion or $30 trillion company. I mean, these are insane evaluations that you're predicting is going to happen 10 years from now. But why not wait till you see it? Why not wait to see that SpaceX is having a return on their outer space missions? Wait to see that they actually build a space or a data center in space before you invest in it. Right now, you're just throwing money away. You're just burning money. Google for a very long time had a really high free cash flow positive, and now they're free cash flow negative. Money's leaving these companies, and it's going into investments. Now, whether they see a return on that, you can't value the Google until you start seeing a return. Now you have to devalue Google because money is leaving, and therefore, if you don't know what the return on AI is going to be, then the price has to come down, because you're not sure if you are going to get a return. I mean, look at a Meta when they invested into the metaverse. That stock took a major hit when they said that they weren't going to invest anymore in the metaverse and they were reducing their capex in that case. The stock pumped, right? Because they're going to hold their cash balance now. They're not going to waste it. Google is willing to sacrifice employees to increase their capex. Meta's doing the same thing. Expect Amazon to do the same thing. And all these hyperscalers that are wanting to get into this AI race, they're going to reduce their balance, their cash on hand, and they're going to reduce their employee numbers if they have to get more money. So I'm expecting downside in a lot of these names, especially the Max 7. Tesla's been a case where they've been burning through money quite a bit, and when you start to see that the revenues are increasing well beyond their capex, then yeah, value them much higher. But until then, there's no point in sitting in them and saying, yeah, 10 years from now, it's going to be this or this or this. That's just pie in the sky dreaming. And for somebody like Kathy Lee to be doing that is just absurd. Because as crazy as she is, some people believe in her, believe that, her assessment. Same thing with Tom Lee. Bitcoin's going to be at $1 million. You don't know. You're just pulling stuff out of your butt. These treasury companies, MSTR thinks that Bitcoin is going to be worth millions, right? Well, if it is, then, and they're reducing their Bitcoin balance, then that stock should be valued at a lower number, right? There's no reason to say that it should be valued much higher when they're selling their Bitcoin just to stay alive. So you got to look at what the value of these companies are. And I'm not a fundamental guy. I look at the charts, but you can clearly understand why Google has been trending down and is now gapping down. Is because they're increasing their capex in something you don't know whether there's going to be a return or not. It's just common sense. So I showed the chart that there was some sector rotation into the energy sector. And so I wanted to see if there were any other names in that sector that I missed that I may want to add to the portfolio. And, I don't want to add COP. I mean, if it shows strength and gets over this 121, I may add it, but I don't want to add it here. I need to see proof that it's going to go higher. So I'm going to look to see if it gets above this 121.58, and then I may add it to the portfolio. There was another one here, Enbridge. I don't know much about this company, but it looks like it's consolidating up here and it wants to move higher. It's just kind of putting a bull flag up here. So that may be one. And then Marathon, was it this one? No, not this one. Hold on. No, not this one. This one. So TC Energy Corp, you can see it's just trying to break above this level right here at 70. We'll just say 71. If it breaks above there, I may add it to the portfolio. I think all these energy names are just going to go higher. Not Fang. Oh, ET was another one. Where's it at? ET. Yeah. So it looks like it's rejecting right now this higher price level. I would like to see it correct some and then move higher. But if it breaks above here with some strength, I may add it to the portfolio. So those are the two. And then some of the ones that I was thinking about shorting. Let's see here. Uh, okay. So mu is if mu comes back down to this 816, I am going to short it. It bounced off of there. It tried to get above 1,000. It's basically it's going to trade within this range, and I think it's going to break down after that. SanDisk is much weaker. If it breaks this, let's just say 1293 area, with some strength to the downside, I will short it. I was also looking at Palantir. Palantir looks weak. And so it bounced previously off this level here. It bounced again. It tried to stay above it, and now it looks like it wants to break down below that. And so I was thinking about adding Palantir on the break of this level, 122.66, hoping that it eventually breaks down here, and then it starts to challenge this swing low down here. So you can see it's just putting in, it put in a consolidation. It tried to bounce. It didn't have much strength, and now it's rolling over again. So I will probably add Palantir as a short. I don't want to short NVIDIA. NVIDIA's killed me so many times on thinking that it was going to go down lower. And I don't think I took this. I did take this. I don't want to short NVIDIA. AMD looks still strong. MRVL was the other one. If MRVL comes back down to this support area and breaks, I will short it down to this 126 area. So I'm looking right now at, let's just say 176. Yeah, I don't plan to short any of the software plays. They're pretty much beaten down as it is. Microsoft may be an interesting short because I'm sure they're going to increase their CapEx as well. Yeah, it would have to be on the 350. If it broke 350, I will probably short it. Where's the next? So there may be an additional level there. But most likely it's coming down to 308, maybe 309. Tesla was one that I should have shorted and I didn't. It's breaking this this uptrend line here. Man, this looks really enticing. If it breaks this 301 40, I may short it. Yeah, I may short it. We'll see. It's come down quite a bit already. It's probably due for a bounce. We'll see. I'll have to monitor this one. But it looks like this is kind of the level to short right here. Amazon. There's nothing really there. I mean, if it breaks this level, but you'll come down to this. So it's not much of a return. How does TD Water look? Or Tidewater? Yeah, it doesn't look enticing. There was one other play that I saw in Rob's portfolio that looks interesting, and it's this Brown and Brown. It's not going to be a big mover, but it looks to be putting in this inverse head and shoulder pattern. So if it breaks this area right here at 70.63, I may add it to the portfolio, expecting it to then come up to this resistance level at 81.50. So there's a few of them. I don't want to get completely full in the portfolio with positions, because I do think the market's coming back down, and I am looking for these targets to get hit. Um, Although I do think we're going to get a bounce on Monday, tomorrow. It didn't come down to the lows, and so my expectation is that this target that formed on Friday at 74.27 should get hit on Monday if we get a bounce. If we gap down, then all bets are off. And then I would look to see if these levels right here are going to break at 380, and then, 73.80, and then 73.77. And then if those break, more than likely, we're going to start to cascade down to these June 11 targets. But I do expect us to eventually hit these targets, and I think we are starting to see a trend down, a rollover and a trend down. This is the XLE, and you could see it just looks really strong. It just wants to move higher. The next level is probably about 61.5. And then you look at technology, and you can see it's just rolling over. There is clear money coming out of this sector, and I expect it to challenge these lows down here. But yeah, so that's the markets. I am looking I may play some of these targets. I may buy some puts in the SPY to target some of these targets. But I'm expecting us to start to move down and start hitting some of them. I may add some of those oil names. Let's look at Bitcoin. So, Bitcoin is a liquidity monster, and liquidity is leaving the market. So I expect Bitcoin to roll over. Let's just say I think by the end of the year, Bitcoin will be lower than it is right now. So my expectation is that we were seeing this rejection from the lows down here, and it didn't want to come down. It was going to move higher, and I was watching it. I believe I got to look back on my entries, but I believe I got in on this break of this level right here. Blow it up. I got in on this break of this level right here, and it moved up higher. And my expectation was that we were going to continue to break this double top right here. This is the double top. We may get a rejection candle, but we were going to eventually break and move up to this downtrend line that's been respected before. You could see it was respected. Well, it started up here and it was respected right there. And then we were going to break through here, and then, or not get up to here and then have a correction and then break through. That didn't happen. It just rolled over. And I think I got out on this candle. And it's kind of bounced since then, but, I'm expecting it to fall out of this trend and test this lower level at 62,242. And I don't think the lows are in. I said that I thought that they were in. I don't think they're in now. This is too weak of a move. This should have showed strength. You should have seen a much stronger move. And this is just petering out. I was expecting, move something like this, and I didn't get it. And this is important information. I have this box here saying that the previous cycles end in August and at some point between August and or September and the end of the year, we should see a low in crypto. This is kind of gold in a sense, in that there's no rhyme or reason why Bitcoin on every 4 years in October should bottom. Like, people aren't holding their money and saying, I'm going to wait 3 more years because we're 1 year into the cycle. I'm going to wait 3 more years and I'm going to buy in October of, whatever. And there's no rhyme or reason. These cycles in Bitcoin correlate with liquidity cycles. And right now, liquidity is leaving the market. Okay. There is no liquidity to push Bitcoin higher. And so these lows are going to get taken out. I am almost 90% positive that these lows are going to get taken out and we're going much lower. I don't know where we're going. I don't know what the bottom is. And I need to move out, because the next liquidity cycle is not, and this is strictly from projection, the next liquidity cycle is not till sometime in the later end of 2027. So I think I had it a year too early. I think this is going to be when liquidity comes back into the market. I think we're going to continue to see, we may get bounces and we may get, this trend line may break and we may get up to one of these resistance lines, but I think the overall trend is going to be down. And I think that's going to be the same case in the markets. Gold is different. Gold and silver are different in a sense that they're so dependent upon China buying, and whenever China buys, you want to be in gold, and they're starting to buy again. And you saw that this past week, that there was some strength in gold. It got taken back, and the dollar has also gone up, so that's not going to be good for gold. But I may take a position in gold if it breaks this level up here at 41.65, because I think there'll be increased demand to hedge for future weakness in the market. And I think gold may be the hedge that people will take. Bitcoin is not a hedge. Bitcoin is based purely off of liquidity, and liquidity is drying up. So I'm open-minded to keeping gold and silver on a possible entry. I'm not for Bitcoin. I'm bearish Bitcoin. And any Bitcoin related stock, BTBT, I'm bearish. CleanSpark, bearish. Miners, I'm bearish. Not only because the AI play is going to roll over, but also because Bitcoin, they mine Bitcoin. They haven't been treated as Bitcoin miners in a while, but if Bitcoin goes down, I guarantee you, goes down significantly, those miners will go down as well. So I'm bearish the data centers. I have them under data centers because they're not trading like Bitcoin miners, but I am bearish on them, especially when Meta has ample supply that they're renting out to other people. Yeah, so that's pretty much it. That's pretty much my thoughts. Bearish Bitcoin, crypto, bearish software stocks, bullish energy, neutral on gold and silver, some of the metals. It may turn bullish. We'll see. We'll see if they can break higher. That's pretty much it. I'm bullish oil. And that's pretty much it. So we'll go ahead and leave it there. If you have any questions or input, just put it in the chat, in the Substack chat. Thanks.